Well, the rebellion is beginning. Major media companies calling out Netflix for how the streaming service handles third-party content. During an investor day yesterday, Discovery Communications President and CEO David Zaslav summed it up by saying, when it comes to Netflix, quote, if you look at what's happened in the U.S., it's not rational. And I think a lot of players are starting to understand that. David Zaslav joins us right now in a Fox Business exclusive talking a bit more about that. David, great to see you.
Good morning, Maria.
Thank you so much for joining us. So you said that yesterday at your first ever investor day. Right. Congrats. I know it was a big showing. Lots of investors coming to hear your growth story. Before I get into Netflix, let me ask you about the story right now of Discovery.
Sure.
What was your headline at that investor day?
The headline is that the U.S. advertising market is getting better. We'll be in the fourth quarter, we were down a little bit as an industry. In the first and second quarter, relatively flat as an industry. This quarter will be up mid-single digits. And so the advertising market is improving. Our share in general has improved this year. Our channels are stronger: Discovery, TLC, Animal Planet, ID, Oprah with OWN. So we're gaining share. We're spending more money on content. And we committed that over the next 3 years, even in a downside scenario, and we think that the U.S. is really going to be relatively flat over the next 3 years, we will see growth. If, in fact, the cable universe declines more precipitously, we still committed that because of our core structure and the fact that we have high single-digit affiliate revenue that we've locked in over the next several years, that the U.S. will be a growth market for us over the next 3 years. Having said that, our international business, which is now more than 50% of our company, is growing at a higher rate and is really accelerating, which is what we tried to accentuate yesterday at our investor day.
These are all really positive scenarios in a situation where we're all talking about this global growth slowdown. Right. You actually have the largest exposure to the global story out of anybody out there and have been seeing these market share gains. But I really like what you said about the U.S. in terms of advertising. Even if it's flat, you're still seeing a better performance than you have seen. So maybe you're seeing some improvements in the economy in the U.S.
Yeah. Well, I would say for us it's really two pillars. One is for the last 4 years, we fought really hard to get more subscriber fees for our 14 channels. So 3 or 4 years ago, we were getting 4% increases in our fees. Now we've done most of our deals, 80%, and for the next several years, locked in, we have high single-digit growth, which is about 50% of our U.S. business. The advertising market itself has definitely improved. The scatter market is strong. Pricing is strong. The challenge is, do you have the rating points to sell? In our case, we do. And that's why, for the first time in 3 quarters, we'll see mid-single-digit growth on advertising. So we'll have a good revenue quarter in the U.S. But you're right about international. And it's sort of the same. Maybe the U.S. is a little bit stronger than most of the economies around the world. But, I can't remember a time when we're in 230 countries. I can't think of one country that has GDP at 5%. And so almost everywhere you look, it's flat or slightly down or slightly up. Yeah. And so the fact that we've been able to grow over the last 8 years, our international business double-digit, through recession, through challenge, is because our core structure is good, but we've also grown market share. And so that international business, which 9 years ago when I got there was $100 million, last year was over $1 billion. And now we're the leading international pay TV company. And I think it's really because our content is strong, our brands are strong, and the cost of our content is relatively low.
And you were talking about $10 billion in cash flow for the next 3 years at the investor day yesterday.
Over the next 5 years, we'll have $10 billion of available capital.
Yeah.
And so what we got to figure out, which is a good thing, is how do we deploy that $10 billion? And so some of it, the first place we'll look is to invest in ourselves. Can we launch more channels in Brazil, which is still seeing substantial growth, or in India, where we're now in 5 languages? So
wow.
Should we launch, more channels in these emerging countries? Do we invest more in our core brands?
Yeah.
With Oprah, with Discovery, with Science, with Animal Planet, but also acquisitions, and finally, stock buyback. So we've been a big buyer of our stock. We look at where our stock is today based on our projections for free cash flow and earnings per share, and we think we're quite cheap right now, and so there's always that strong option of buying back our stock.
Yeah, no kidding. The entire industry really took it tough in the last couple of months when we saw that huge sell-off in the shares. But let me get your